All right, let's get into it. Today, we're basically going to be detectives. We're cracking open the technical report card for one particular stock, Oriental Culture Holding, ticker symbol OCG. We're going to follow the clues buried in the data to see exactly why it got such a bearish rating. So you might want to grab a magnifying glass because our investigation is starting right now.
You know, every good mystery starts with one big question. For us, it's pretty simple. After all the number crunching and analysis, what's the bottom line? What grade did OCG actually get on its report card?
And here's our answer. Out of a possible 100, OCG scores a 2.91. Yeah, you heard that right. That isn't just a failing grade, it's a score that immediately tells you something is seriously wrong under the hood.
The report itself really doesn't pull any punches. This one sentence confirms that initial shock we got from the score. Exceptionally weak. So, our job now is to figure out why. Let's start following the evidence.
Okay, our very first clue has to do with the most basic question you can ask about any stock. Which way is it going? Is it climbing a mountain, falling off a cliff, or just kind of drifting sideways? The answer here is absolutely critical.
So what do we mean by trend? Well, simply put, it's just the main direction the price is headed. The easiest way to think about it is like a river's current. Is the stock swimming upstream against the flow, or is it getting pulled powerfully downstream? For OCG, that current is a huge part of the story.
And this number tells us just how powerful that current is. This is the stock's ADX reading. It's a tool that only measures the strength of a trend. A high number doesn't care if the trend is up or down. It just tells you that it's strong. And for OCG, well, this is a massive piece of the puzzle.
And here's what that means in plain English. A score over 50 isn't just a trend. The experts call it a very strong trend. So this tells us that the stock's downward slide isn't some random fluke or a little dip. No, it's a powerful, established, and really intense move to the downside. Clue number one is crystal clear. This stock is in a serious nosedive.
All right, let's move on to our second clue. If the stock is falling this hard, what's stopping it from getting back up? Well, it turns out there are some pretty big obstacles, or what traders call resistance levels, blocking its path.
So to understand these hurdles, we need to compare where the price is sitting right now versus where it's been on average over the last few weeks and months. This little comparison tells us if the stock is trading above or below its own recent history.
Now, what's so telling about this slide is how it just lays the problem bare. The current price of 219 is trapped way below its 20-day, its 50-day, and even its 200-day average prices. Each one of those averages now acts like a ceiling, a layer of resistance the price has to punch through just to recover. It's like being stuck in the basement when you have 3 floors to climb just to get back to ground level.
Our third clue looks at the energy behind the stock. Does it have any fight left in it, or is it just running out of steam? This is what we call momentum. It's the force that's actually driving the price.
So, the key takeaway here is that momentum tells us about the enthusiasm of buyers and sellers. High positive momentum, that means buyers are really excited. High negative momentum means sellers are completely in control. And for OCG, the momentum indicators are painting a very, very clear picture.
Let's just take the relative strength index, the RSI. A reading below 30 is considered oversold, which is a sign of intense selling. OCG's RSI is way down at 23.94. It's not just in oversold territory, it's deep inside it. This really suggests that the selling pressure has been relentless.
And it's not just one indicator saying this. A second one, the stochastic oscillator, confirms the exact same story with an even more extreme reading of just 8.46. When you have multiple clues all pointing in the same direction, the case starts to get pretty solid.
Okay, so we've seen a strong downward trend, we've seen major resistance overhead, and we've seen collapsing momentum. At this point, the case is pretty much closed. But, any good detective always looks for that last bit of corroborating evidence, just to be absolutely sure.
And wow, the report offers a mountain of it. The MACD indicator, it's giving a clear sell signal. The on-balance volume, which basically follows the money, it shows way more people are selling than buying. The price is literally pinned to the lower Bollinger Band, another huge red flag. I mean, the Aroon indicator, the CCI, just look at this list. Every single data point is screaming the same thing.
To really put all of this into context, let's zoom out and just look at the whole year. This chart is so powerful. You can see the stock's absolute lowest price in the last 52 weeks was $1.79. Its highest was over $7.
And the current price? It's sitting right there, practically neighbors with that all-time low.
To put a hard number on that visual, the stock is trading in the bottom 7% of its entire yearly range. It has wiped out more than 90% of the ground it gained between its low point and its high point. That is the very definition of long-term weakness.
And that really brings us to our final thought here. We've just followed a trail of clues, a strong downtrend, major hurdles, collapsing momentum, all backed up by a dozen other indicators. And every single clue led to one unanimous conclusion. This whole case shows that when it comes to investing, risk isn't just one bad number. It's when every single signal from every possible angle points in the same dangerous direction. It's a powerful reminder that sometimes the data doesn't just whisper a warning, it screams it.